Hello guys, welcome back to Zodiac Trading. So today we're going to have a very quick update on the Fed's decision in 2025, and we're going to talk about the bankruptcy filing rate in the United States of America, where we're actually seeing a very, I would say, diverted facts right now because even though Federal Reserve claimed that inflation is being tamed and the Fed during like the early year of 2024, the Fed claimed everything is good, everything like inflation is going to be tamed back to 2%, and also the Fed claimed that it's going to have more rate cuts in 2025, and they sort of giving us a very positive signal of that the U.S. economy is going to have a soft landing scenario, and he's very confident that the inflation data is going to be back down somewhere near 2% by the end of this year. But however, we are seeing a like reality check right now. We're seeing a much very different picture compared to what the Federal Reserve has been telling us for so long. We're actually seeing the print. We're seeing the inflation print going back at 2.7%, which is a rebound of inflation. So that means, like the Fed has made a mistake. They actually think they are going to tame back inflation back towards 2%, but then we're seeing October and November, 2 consecutive months, the inflation going, back up. So yes, the data is not very good, and also we are seeing United States of America, we are seeing the jobless rate actually go up a little bit compared to the October number, and which is not a very very positive signal. We're seeing wage growth, and also in the same time we're also seeing unemployment rate going back up. So because if you guys go and check the FOMC meeting that back then when journalists from different media trying to ask the reason why the Fed is going to cut the rate when the inflation hasn't been tamed back at 2%. The Jerome Powell actually said that it's precautiously the Fed is very positive of the economic data, so that's why in order to protect the job market, in order to create sort of a soft landing scenario, that's why the Federal Reserve decided to have rate cuts, even though the number hasn't gone down to 2%. So now, obviously, like the journalists are not being convinced by the way he said about the inflation number, and also his policy against the inflation. Actually, a lot of journalists are very confused with the way he put it. So let's just put it this way: the Fed decided to have a rate cut despite of the fact that the inflation number has not going back, back down at 2%. So right now, the inflation is going to be more sticky, and it's going to stick around. And right now, the Fed decided that all of a sudden, last week, all of a sudden the Fed decided that they are going to be more hawkish by having another higher for longer. I mean, I've been saying this for a long time. I've been saying this inflation is going to be bottom, and then it's going to have a reflation. We're going to see that inflation going back up. We are going to see that recession kick in in the United States economic figures. I already said that somewhere near August, but then now we're seeing the inflation number going back up, and that's not a good sign. And right now, like the Fed has made another tremendous mistake because its monetary policies has made zero sense, right? That's just be honest about it. It makes zero sense, and to be able to have a very aggressive rate cut, to give the market, over positive or over optimistic expectancy. So people and traders, the entire Wall Street decided that they will go long all along. They're very confident because the Fed is being very confident. So now the Fed decided they're going to halt the interest rate. And my guessing is that in 2025 we're probably not going to have like free rate cut. We're probably going to have stick to one or two rate cut. That's like maximum. So imagine that because right now the interest rate is still high. We're still having a Fed rate around 4.5%. So the mortgage market and also other loan market, we're going to see the high interest rate stick for a while. All right. So we're seeing the mortgage rate is trading at somewhat 6.5% to 7%. So that's very high, and we're going to see more negative signal from the housing market because the rate is high. People have to pay more money back. Their mortgage become more expensive. Hence why people are bearing more burdens economically. Right? People are having bad days. But then the Fed trying to convince us that they have managed to take back inflation. But the fact is, right now, if we look at the bankruptcy filing, if we actually see this from the courts, the bankruptcy filing rise 16.2%. Okay, this is the official website from U.S. courts, and the number that we're looking at are individuals and also business that filing for bankruptcy. We're talking about mid-size, smaller size of companies. We're not talking about like globalist big companies. We're not talking about Fortune 500. We're not talking about listed companies. We're talking about like honest people. We're talking about like everyday small mid-scale kind of companies. Like the problem with the economics these days is because they value the S&P. They think that Nvidia is going back up, like the share price of maybe Meta and Nvidia and all these companies, so-called Max 7, go up by 10 to 20%. They think that's a positive signal for economy, but that is not a positive signal for economy because it has zero correlation. It has zero connections to ordinary people. We're talking about ordinary people. We're talking about mid-sized companies. We're talking about SME. We're talking about those smaller size companies. These companies they are not going to make any profit, or they are not likely to have any benefits if the S&P 500 gone up by another 10 to 20%. So you couldn't actually call that a economic win if the stock market has bounced up by 10 to 20% because all these Max 7 company stock shares, these companies are gigantic entities. They have business all across the world. They not necessarily they have their cost center or production center in the States. So to say that if S&P 500 goes up another 10% or 20%, you call that a U.S. economy win? I don't really kind of buy it. So that's why if you actually look at the bankruptcy number right here, it's frightening, right? We are seeing more and more bankruptcies. We are actually looking at a new peak ever since 2020, right? 2020, it was a COVID meltdown. That's why a lot of companies filed bankruptcy. We had nearly 700,000 companies filing for bankruptcies during 2020. But now we have nearly 500,000 companies bankrupt, filing for bankruptcy in the United States of America. That is a very, that is an imminent signs of an early recession. All right. So why? So the question comes down to why these companies, keep being bankrupt. And if Fed says, if the Fed claimed that they have taken back inflation, why is this all happening? The answer is simple. People pay extra money for food, for everything, for energy costs, for everything. Everything is going to be more expensive. And the wage growth cannot keep up with the inflations. And people are having problem buying houses because the wage growth cannot keep up with the asset price. Okay, so if say asset price bounce up by 20%, maybe your wage only grow by 2% to 5% nominally. So that would create a 15% to 16% kind of gap, and that is the reason why you're not going to afford to buy a house in the United States or any other places. People actually own assets. They are the people who actually enjoy all these fake prosperity. Okay, but people, normal people, we're talking about working class people, we're talking about SME companies. They are suffering because the cost of everything skyrocketed. Okay, they have to pay for the tax, they have to pay for the extra inflation, and etc. That's why they are bearing a lot of burdens. And right now, if you see this bankruptcy filing number, it's very bad for business. So today it's a quick update. In the next video, I'm going to give you more numbers of bankruptcy numbers and why I'm thinking that there will be an early recession, and why is U.S. economy is going to face, and it's right now it's a bubble, so it's going to burst. So we're going to be really financially and mentally prepared for that. So I will see you in the next episode. Thank you for watching. I'll see you next time. Bye.